Joining me now, Brett Richards, the CEO of Pasofino Gold. Great to see you, sir.
Great to see you again.
Let's talk about the Dugbe project in Liberia, which you are moving toward a feasibility study. Give us a snapshot if you could.
Yeah, for sure. We have about 3.9 million ounces of total inventory of gold. The project's very well advanced, very well developed. It's been around for about 15 years. Pasofino earned into it 3 years ago on the delivering of a feasibility study in 2022. And that feasibility study has kind of sat idle for the past 3 years. And what we're doing today is we're updating it to kind of current. Back in 2022, we used obviously lower gold price assumptions. And the economics of the project were stellar back then, and they're going to be even better this time around. But it's a pretty large-scale project, $400 million in capex, just over $1,000 all in sustaining. So the economics in this gold price environment are going to be pretty decent.
Right. You mentioned the feasibility study in 22, 1,700 gold was the number you used. Needless to say, we're way beyond that now. So in terms of the economics of the new feasibility study, how much more robust do you think it'll be in terms of mineral resource assessment, the new mine plan, all the other things you're going to do?
Yeah, great question. I think when you start to have these big jumps in gold prices, it really does change the dynamics of the project. We're not going to change the scope of it. It's 5 million ton a year throughput, and we will be updating the resource. I don't believe we're probably going to add a lot of ounces to it, even though the gold price assumption we're going to use is probably $2,700 or $2,800. And we are going to be doing some infill drilling just to make sure the reconciliation to the new resource model is accurate. And then the mine plan, obviously, it's going to resequence based on grade. So completely different at the end of the day. But, do I think that the economics are going to be, much more improved from the 22? I do. And the 2022 feasibility study had a 26% IRR and a $700 million post-tax NPV at $2,000 gold. So now we're talking about something substantially higher.
Yeah, those numbers are going north for sure. So you've got some priority drill targets, but you said you've really only explored about 11% of the land package. So clearly there's room to expand it, right?
There is, and this is part of the feasibility study update we're doing, is kind of understanding that for not just concluding a feasibility study, but how does this mine look when it gets built, and what's it look like in year 3 and year 5? So the process flow sheet traditionally had, crushed gravity, crushed grind, CIL, and only 10% of the resource is oxide, about 10% transition material, and about 80% fresh ore, sulfide. And although it liberates fine, we're going to be doing 2 things. We're going to be looking at metallurgical test work to improve the recoveries from what was used in 2022, which was 83%. But we're going to be looking at the alternative of looking at flotation. So maybe the first 3 years of the project, we do crush grind CIL. Then maybe we introduce flotation as a way to increase recoveries of the sulfide when we get a little deeper in the pits. And that balance will be kind of augmented with some resource development drilling from day one, so we can go find another discovery. On to your point, we've only explored 11% of our land package, and the whole 1,400 square kilometers we have is all beryllium greenstone. So we have the potential to bring in new discoveries, potential new satellite deposits, which will keep the oxide circuit and the transition circuit full. And then the sulfide circuit, I think what we would look at in year 3 or 4 is possibly another feasibility study to go underground in Tucson. So now we're talking about, instead of a 200,000 ounce production profile, we're talking about 230, 240,000 ounces and a much longer mine life. Instead of 14 years, probably closer to 20.
Right. Now, Brett, you said you've spent a lot of time in Liberia recently. Generally, you're there once a month. You meet with government officials and other stakeholders, and you say it's a stable jurisdiction and pro-mining, and a lot of people get their backs up when they hear, Africa, Liberia. But can you tell us why it's advantageous to be there?
Absolutely. And quite frankly, it's based on my experience. I have been in this business 40 years. I've lived and worked in Africa for 25 of those years. I've built a mine in the Congo. I built a mine in Burkina Faso, Sierra Leone, and I've rehabilitated mines in the Congo, Mali, and Guinea. As far as jurisdiction goes, this is by far probably the best jurisdiction I've ever worked in, and there's a reason for it. The reason is that yes, the government is pro mining. Yes, they are very cooperative and they're very accessible. But mining is very immature in Liberia. There's only 10 Class A mining licenses in Liberia. Whereas you look at Mali, there's over 100, Ghana 300, Burkina 100. So they want to help, they want to develop the mining sector as a larger part of their GDP. And they've been very helpful in doing that. And when we see a lot of the geopolitical uncertainty in some of the other countries, like Mali, and let's be honest, Mali, Burkina, Niger,
yeah.
They've all been very difficult when it comes to, they've gone through a military coup, they've gone through a dictatorship, they're currently in dictatorships, a lot of influence from the Wagner group out of Russia. And, investors have just said, risk off, I don't want to be there. Liberia is different. And geopolitically, there's a strong historical connection to the U.S. And it dates back to the 1800s. But it has the second largest U.S. embassy. It's English speaking, and it's U.S. dollar denominated. They have their own local currency, but business there is much easier to do than Francophone Africa or Sub-Sahara or Sub-Sahara Francophone. So I see this as an opportunity with such a large endowment, such a large project that, Pasofino investors can expect some real performance over the next little while.
That's really interesting what you say about the environment there in Liberia. And lastly, would you agree that the stock was in the penalty box for a little bit because you had to smooth out these ownership issues, which you have, and you say that now there's a rebirth of Pasofino Gold. So with that as the backdrop, could you sort of give us the main factors in the investment case?
Yeah, there were some bumps along the road earlier this year in January, February, March. Hummingbird Resources, which held 51% of Pasofino, they went through a takeover by their bank. They were basically an event of default, and they were taken down by the bank. And the bank actually triggered our shareholder rights plan. So we had a bit of a legal, problem for the first 3 months of this year. But we emerged in June of this year with a cooperation and support agreement with the bank, with Nyoka Resources, their private equity arm of the bank. And we're aligned. We're aligned on strategy, we're aligned on financing, and we're aligned that we don't want to sell this project. We want to develop it. We want to build it, because that's where the long dollar is going to be here. When you start talking about margins of $2,500 per ounce in this type of gold price environment, we're talking a project that can deliver $500 million of free cash flow a year. So the bank doesn't want to just sell it and flip it and be done with it. We want to jointly develop it. And this is where Pasofino investors are going to really benefit over the next year in that environment.
All right. Thanks, Brett.
Thank you.
Good to see you. That's Brett Richards, CEO, Pasofino Gold.